Hello, my name is Ben Wilson. I'm the ACCA's expert tutor for the AAA exam paper. And it's groups in this topic explainer. Everyone loves groups. A lovely technical topic full of detailed financial reporting that you need to know and lots of technical auditing stuff as well. Everyone loves this sort of subject, don't they? No. You are probably like most students, and something like groups, you kind of go, oh, I really hope that doesn't come up in my exam. But I've got bad news for you. It comes up really quite regularly. The examiner builds it into lots of different types of questions: risk questions, quality management questions, reporting questions, acceptance questions. Groups can feature in so many different types of questions in the exam that there's a really good chance that you are going to get examined on it. So it's really worth focusing your attention on groups. And this topic explainer video is going to help you to direct your studies and also your exam technique so that you can cope well if and when groups does come up in your exam. Our agenda for this topic explainer, we're going to start with a bit of a recap about groups with some key information that you need to know. And then we're going to talk about common issues that students have, mainly in terms of exam technique, in terms of those group questions. Then I'm going to give you my top tips on how to overcome those exam technique issues. And I'm going to give you some advice on suggested questions for you to practice on groups from the ACCA Study Hub. So let's start with that topic recap then. Well, here are some of the basics, and I'm hoping that in this part of the presentation, you're just going to be nodding along because you just know everything that I'm talking about, and this really is just a bit of a refresher. But if it isn't, it's a real hint that you need to go back to your SBR notes and really recap the basics on financial reporting around groups. So a group of companies, at the top of that group of companies, there will be the parent company, the owner of all of the other businesses in the group. And the parent company will have its own financial statements for the individual parent company. And it will also have consolidated group financial statements that bring together the financial results of all of the companies in the group. Now, talking about those companies in the group, the simplest type of company, I think, is a subsidiary. A subsidiary company, well, that's one where the parent company controls the subsidiary business, or the business underneath it. And that control, well, the easiest thing to look for in a question is that the parent owns more than 50% of the voting rights, the share capital, the voting shares of the business. There can be other indicators of control as well, can't there? The number of people you have on the board, the ability to influence decision making. But really, its ownership is the main thing you're looking for. And if it is a subsidiary company, well, the required accounting is to consolidate the results of that subsidiary. It's called acquisition accounting, isn't it? But you bring in 100% of the assets and liabilities of the subsidiary and 100% of its financial performance, its sales and its costs. You know, if you don't own all of the subsidiary, if there's a non-controlling interest, then we will reflect that in the financial statements, won't we? But fundamentally, with a subsidiary, we bring in all of its results. With a joint venture, well, this is where we have joint decision-making and joint control with another party. And with a joint venture, just keeping it simple, it's a bit different to a subsidiary because we don't have overall control. That control is shared between us and another party. So we don't account for it in the same way as we do a subsidiary. We apply equity accounting. And with equity accounting, well, we hold an investment in that joint venture and we bring in our proportion, our 50% of the post-acquisition results, the profits of that company. That's very similar to what we do with an associate. With an associate, we've got significant influence over the associate, but not control. Generally, significant influence is something like 20 to 49% of the voting share capital of that business. And with that associate, we don't consolidate it in our group financial statements. Oh no, we do the same thing as we do with a joint venture. We apply equity accounting. So we hold an investment and we bring in the proportion of post-acquisition profits of that associate. Now, another technical term that you need to be familiar with for success in a groups question is goodwill. You remember what goodwill is, don't you? Of course you do. That's when we're investing in a subsidiary or a joint venture or an associate, and when we're buying into a company, when we're paying more for that to acquire the shares, when we're paying more for it than the fair value of the assets that we're acquiring. It's the extra that we're paying for things that aren't in the financial statements of the business, effectively, for things like its brand or something like that. Now, we expect to see, in a groups question, you will see goodwill featuring because it's such a common part of the financial statements of a group organisation. So it's important that you're familiar with what it is. Okay, it's the excess that we're paying for, or that we've paid to invest in a business, to buy a subsidiary company over and above the value of that business per its financial statements. Right, now we're going to move on to talking about typical issues that you see around groups in the AAA exam. Because everything that I talked about there was financial reporting. And this is not a financial reporting exam. This is an auditing exam. But the financial reporting does form a heavy part of AAA. You know, in AAA, we are checking that things have been done correctly. That's fundamentally what auditing is. And one of the things the company might have done incorrectly is the financial reporting might be wrong. So one thing we often see in a AAA exam question is that the company has incorrectly classified a subsidiary as an associate, or vice versa, an associate as a subsidiary, and therefore they've applied the wrong type of accounting. They might not have consolidated it fully if it is a subsidiary. So you're watching out in the question. You're looking out for control. What proportion of the shares do they own? The voting rights. And are there any other indicators of control, like ability to influence the business or vote at board meetings and that sort of thing? So that's a very typical issue we see in exam questions. Another thing that we'll often see is that some of the subsidiary companies of the group have different reporting dates, or they report under a local financial reporting framework rather than IFRS, a different reporting framework to the parent company and to the group more widely. And so that can lead to consolidation errors when we bring in the financial results of the subsidiary or of the associate, that there can be errors. So that's something to watch out for. Another thing that's very common in a groups question is that there will be transactions that count as related party transactions that are between the parent company and one of its subsidiaries, for example. When we're disclosing those we need to disclose those transactions separately in the financial statements of the parent company. So we're watching out for related party transactions, particularly because they're material by nature. Even if they're not big, they should be separately disclosed so a user of the accounts is aware of them. And that's something that will often be missing in a AAA exam question. Now, we've already spoken about goodwill. And how it tends to get tested is that one of the subsidiary companies, where we do have some goodwill for it, it might be performing badly. It might not be hitting its targets. And therefore, there's an indicator of impairment. That goodwill should be assessed for impairment. And most likely management won't want to impair it because that's recognising, that's effectively a loss in the financial statements. That's a bad thing. And so management might be trying to cover it up to try to improve the reported performance of the organisation. So watch out for that. And another common issue that is more audit focused rather than financial reporting, which most of the rest of this frankly is that we might be the auditor of the parent company and of the group overall. But there might be a component, one of the companies in the group, a subsidiary, that we don't audit, and we have to deal with the auditors of that component as part of our overall audit of the group. And we're going to discuss that one in quite a lot more detail over the coming slides. So if we are having to deal with a component auditor, well, we're relying on what they're telling us. We're relying on their audit work. So we need to make sure that we can trust them, that they are up to the job. So the kind of things we're looking for when we're assessing a component auditor is, do they have experience? Enough experience in this kind of area of reporting in this particular way? Have they got a good reputation and standing in the marketplace? Can they be trusted? Are they competent? Are they qualified? Are they appropriately qualified? And are the staff that are assigned to that audit, are they good enough? Are they competent? Are they qualified? So we're watching out for that. Are they independent of the business? Or are they a related party in some way? That's something we'll certainly need to assess, because if they're not independent, then, well, that's going to impact their objectivity and the reliability of what they are reporting to us as the group auditor. We'll need to look at the regulatory environment that is in place in the country where the component auditor is based. Because very often in an exam question, this component auditor will be based in a different country. And therefore, they might not be working to the same standards that we expect them to as part of the group audit. Something else we'll need to consider is, can we actually go and see their work? How is that practical for us to do so? Yet we'll need to establish a relationship with that component auditor, because as we'll discuss later, we may well need to go out and review their files in detail to make sure that they've got enough evidence to support the conclusions that they've drawn. Now, the work that we're required to do as the group auditor, because that's the normal scenario in the exam, we are the group auditor and we're assessing the work of the component auditor. Right, so what is the group auditor actually required to do when they're dealing with a component auditor that is not part of their same firm? Well, actually, a lot of this applies even if they are part of the same firm. So, first thing we have to do is assess the component auditor. Can we work with them? Yeah, using all of those factors that I discussed on the previous slide. Then once we've said they're okay, yeah, happy to work with them, we need to send them out instructions about how we expect them to perform the audit and what we are expecting them to report up to us as the group auditor. So that will be things like an ethical assessment, right? Confirming that they are independent. This is what we expect from you in terms of independence, and this is what we expect you to report to us on that matter. We'll tell them what materiality is. It's the group auditor that sets materiality for the group reporting that is required from the component. We'll set out any significant risks of material misstatement that we as the group auditor have identified during our planning. We'll tell them any that are relevant to their particular component so that they know what to watch out for. And we'll give them a list of related parties so that they can report back to us on any transactions between their component company and any of those related parties. And we'll also say to them, this is what we expect you to report back to us. This is the format of the reporting that's required, and this is what we expect you to tell us as the results of your audit work of that component. And then, once the work has been done and we have received that reporting, our job is to review it. Make sure that we're happy with the evidence that the component auditor is reporting up to us. Make sure that we are confident in what they have actually reported. And if we're not, we need to go into it in more detail. Now, what I've just described there is what's done for all components, all subsidiaries and associates and what have you of the business. But If a component is particularly significant, a big one, well then there's extra work that's required. But how do we know if a component is significant? The first way that we decide if it's significant is based on financial metrics. If that component makes up more than 15% of a key financial metric, like revenue, profit, or total assets, if it's over 15% of the group total, then that suggests that it is a significant component. But we don't just look at the numbers, we also look at non-financial factors as well. Is this business small in terms of its financial results, but does it have some particular strategic significance to the overall group, which makes it more significant than it appears to be? Or it might be that it's a particular risk of material misstatement for some reason, in which case we might decide that it is significant. And if it is a significant component, well, there's extra work to do. We actually have to go out and in detail review the audit files of the component. The reason we have to do this extra work and take more care over what's being reported to us is, well, this subsidiary company, this significant component, is a really big part of the overall group. And therefore, we're placing more reliance on the work that's been done by the component auditor because our overall group opinion is really significantly impacted by the results of this component. So we need to make sure we're very happy with the work that they have done. We're making sure that there is enough evidence in their audit files to support the conclusions that they've drawn, because we're relying on those conclusions for our group audit opinion. And crucially, if we're not happy with anything, the work that's been done, well, we may say to the component auditor, go and get some more evidence because you haven't got enough here yet. Or more likely, if the component auditor hasn't done their job properly, it's more likely that the group auditor will step in and go, look, we're not happy with what you've done here. There's no point asking you to do more because clearly I can't rely on you. I'll need to get my own hands dirty and do some more audit work myself here to gather extra evidence. Right, now on to common issues that students have in groups questions. The first of these issues is that students just don't have the required technical knowledge to be able to understand the scenario properly and to work out what the company has been doing incorrectly so they can't explain it. So the student lacks technical knowledge, particularly around financial reporting. You need strong financial reporting knowledge. You need that understanding because if you don't have it, you can't work it out. You can't realise when the company is accounting for something incorrectly around groups. And students often also lack knowledge around component auditors. You know, trying to work out whether it's a significant component or not, and what work the group auditor is supposed to do to assess the work of that component. We've just recapped it on those previous slides, so hopefully you're feeling a little bit more confident and comfortable there now. But anyway, that is certainly an issue that many students have with groups questions. Next issue, and this is related actually to the first one. Now, I can tell you this as from my experience as an examiner and as an exam marker for auditing. When a student doesn't know what they're talking about, and that happens quite a lot in the exam, students got no idea what to write. You would think, oh, I don't know what to write. You'd think they'd just move on, but they don't. What the student does when they don't know what to write is, well, they write loads in the hope that perhaps they're going to land on something that scores a mark. They keep writing more and more and more and more because if I take this rubbish point that I don't really understand and I keep explaining it and I explain it again and I explain it again and more and more and more, surely the marker is going to be convinced that I do really know what I'm talking about. And, well, it's obvious to a marker when a student is doing this. Very obvious. So if you feel this happening to you in the exam, it's a massive waste of your time. All right, so if you don't know what you're doing, the answer is not to write 5 times as much in the hope that you land on something that does score, because you won't. The third issue that I find that students have, and it's related to those first two, is that Time management is really difficult in one of these questions. Student doesn't know what they're doing, so they take a while to understand the question, and then they write way too much, which takes them extra time. So students end up massively overrunning on the group's issues. If it's a risk question, something like audit risk, there might be 20 marks available overall in the question. And it might be that there's 1 or 2 issues around groups. But the student spends forever on those 1 or 2 issues, a long time trying to understand the scenario, and then even longer trying to write their answer to try to convince the marker to give them marks. And they spend ages on those 1 or 2 issues, and they neglect the other issues that are in the question. And so the student misses out on the easier marks that are available elsewhere in the question because they're focusing on the hard bit. So how can you overcome those issues? Well, here are my top tips to help you to overcome those problems. My first tip, and this is around your technical knowledge, right? This is applicable to groups, but it is also applicable to other areas of AAA. You really need solid financial reporting knowledge if you are going to succeed in the AAA exam. Financial reporting has always been important for AAA, but in recent exam sittings, we are seeing more and more marks that are reliant on your financial reporting knowledge. Sometimes up to 15 marks in the AAA exam. You can only earn them if you know the financial reporting. So it's really important to go back over your SBR notes in detail. Okay, it's not the SBR exam, right? So you don't need to know your financial reporting quite as well as you did for the SBR exam. You're not going to have to do calculations in detail, but you do need to know the principles of all of the major financial reporting standards that were examined in SBR, including those that are around groups. Now, if you are thinking, I haven't done SBR yet, you really do need to have studied SBR before you do AAA. Now, it would have been better if you hadn't started AAA and you'd done SBR first, but you can't go back in time and change that. My advice to you would be, don't do AAA. There is no point sitting this exam until you've already done and studied SBR. You don't have to have passed SBR, but you do need to have studied it because there's so much of the AAA exam that relies on you knowing financial reporting content that is only in SBR. Another useful resource for you to help you to recap SBR is to listen to Tom Clendon's podcast. He's got lots of past editions of that podcast that cover different financial reporting standards in detail. They're a good recap of financial reporting standards, and I know that he has editions around groups particularly. So it's well worth seeking that out. You can get it on any major podcast platform. Just search for Tom Clendon's name. My next tip for you, and this is around not writing too much and not getting bogged down. Look at all those beautiful lips there, right? This tip is KISS, right? Keep it simple. When the topic area is hard, when the topic area is technical, your job is to go, oh, I could get bogged down here. Right? I could end up writing a really lengthy answer to just earn 1 or 2 marks, right? And that is not efficient, right? You've got to try to keep your answer as simple as possible. I do that by trying to make my points really short. When it's technical and difficult, my sentences become shorter rather than longer. And I try to use simple language wherever possible. I am definitely not writing out the financial reporting standard in detail around groups. I'm just bringing in the points that are relevant to assessing the risk or whatever other factor it is that's relevant in this question. It's important that if you do feel yourself spending a long time on one particular issue, particularly in groups, that you just stand back and go, hold on. I remember that guy in that video said I could get bogged down and end up wasting loads of time trying to earn just 1 or 2 marks, and that can cost me elsewhere. If you can feel it happening to you, I want you to think back to this moment and go, right, I need to take that advice. If you feel like you're writing, just stop that point. Yeah, doesn't matter if you haven't finished it, just stop it and move on to the next one. Because if you're writing an enormous amount for one point, it is never worth it, right? Move on. Which links in to this third tip, right? This is a difficult area. And Well, you don't have to smash the difficult areas to pass the AAA exam. Yeah, okay, you might be one of those people that wants to earn a prize, right? You might be in the minority there. But for most people, their goal in AAA is to score more than 50% or 50% or more. They want to pass and they want to move on. Okay, and if that's you, and I hope that is you because that's virtually all students, if you do get to something that is difficult like groups, have a go, right? But if you don't know the answer, well, make a few points, right? Try and use the scenario a little bit if you can. But if you don't know what you're doing, have a little go and then crucially move on, right? There will be easier marks available elsewhere. You won't pass or fail this exam because of how you did in the technical bit, the hard bit on groups, right? That won't be the thing that makes you pass or fail. It can make you pass or fail, though, if you spend ages on it, and that means that you don't have time to earn the easier marks that were available elsewhere. Okay, so be tactical. If it's hard, have a go, then move on to the easier marks that will be available elsewhere in the exam, and you will still pass. So here are some suggested questions for you to practice on groups. Hey, hopefully you've already been using the Study Hub. It's full of really useful resources like the flashcards, little quizzes, and excellent questions in the study bank, right? The question bank. And these questions are particularly in the revision question bank. Okay, question 11 Stowe, question 13 Ryder, these are the 50 markers, and question 14 Magnolia, that's another really good one. These are question ones, and then we've also got a section B type question, a 25 marker, Theo and Co. That one is also well worth you having a go at. With all of these questions, you'll get most out of them if you do them under exam conditions. That means doing them to time without looking at your notes before you then review your answer using the model answer that is available on the Study Hub to help you to debrief it. Right, that's it for this topic explainer on groups. I hope you found it useful and you now feel better able to approach a groups question.